Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Semtech stock so we can determine if it's a buy or a sell. Semtech is a supplier of analog and mixed signal semiconductors for consumer, enterprise computing, communications, and industrial end markets. It has 32 locations in 15 countries in North America, Europe, and Asia. The company is headquartered in Camarillo, California, and was founded in 1960. Let's get started with the model. This is a small cap company, 1.3 billion market cap. They're trading at $21 a share, and they have 62 million shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. They do have positive free cash flow each year. It peaked in 2022 at 177 million, and then it came back down in 2023 to 98 million. Their fiscal year ends January 31st, 2023. So they've already completed their 2023 financials. They're currently working on 2024. Net income is the profit or loss on the income statement. It's revenue minus expenses. And that's positive each year, peaking in 2022 once again. Revenue is the sales for the company, and that goes up year after year. Not too much, but it does increase. It's at 757 million in 2023. Let's look at the capital structure. They have 750 million of equity, 1.3 billion of debt. They're 36% equity, 64% debt. Their net debt is 1.1 billion. And they have a really high WACC, 16.5%. That's a discount rate we're going to apply to the future cash flows. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's 1.8 billion. We discounted those numbers back to today using the weighted average cost of capital, and we get a value of the company of $1.5 billion. We divide that by 62 million shares. And we get a calculated stock price of $24. They're trading at $21, so they're trading at a 12% discount. It's a buy according to the model. The website Simply Wall Street's valuation is only $4. They're saying the stock is really overvalued. 7 analysts price this stock, and the average price target is $40. The lowest 30, the highest 62. Another 9 analysts price this stock, and the average price target for them is $40. So lots of analysts think this stock is undervalued. This is where the stock has been trading the last 20 plus years. It was over $40 a share in 2002. Then it was trading below $15 for several years. It came back up in 2011, 12, and 13. Then it bottomed out at about $12 in 2016. And then from 2016 on, it really ran up past $90. But look at this fall from grace, from over $90 to about $20. So if you bought the stock 21 years ago, you'd be down about 50%. Look at these red bars, lots of selling activity. This could be a great time to pick up the stock because I know the forecast is for their revenue to grow quite a bit the next few years. There are 62 companies in the semiconductor industry, and if Semtech has a number in red, they're worse than the average. If they have a number in blue, they're better than the average. They're a lot smaller than the average company, so they spend a lot less in CapEx. They don't have that good of a debt to equity ratio. It's 1.8. So for every dollar of equity, they have $1.80 of debt. They do not pay a dividend. They generate only 100 million of free cash flow. They rank 37th in market cap at 1.3 billion. So they're right in the middle of the 62 companies. But they have really good ratios. Look at their price to book, 1.7. The industry average is 5.8. Their PE is better than average. Price to free cash flow a lot better than average. So even though they generate only $98 million of free cash flow, that's really good relative to their market cap. Because you cannot look at any number on a nominal basis. You have to compare it to the size of the company, the market cap. And they have a really good price to sales ratio, 1.7. The average is 6.4. They do generate a lot of revenue relative to their market cap. But of course, it's lower than average. Their 5-year annual revenue growth rate is only 5%, so that's not good to see. And they have a pretty low ROA and ROE. So to summarize, I have them trading at a 12% discount. I rank their free cash flows 5 out of 10, their revenue 7 out of 10, and their ratios 8 out of 10. So let me know what you think. Give this video a like, subscribe, or comment below. Also, if you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.